It's Thursday, June 25. Here's what today's story could mean for the Korean market.
We are looking at a pretty massive structural shift happening across three simultaneous fronts in Korea's financial sector today, which are, regulatory solvency, technological positioning, and margin normalization.
The mission of this deep dive is to show you exactly how these structural pressures are setting up very distinct, deliberate signals for active traders.
Exactly, because understanding why these institutions are clearing their decks right now is really how you spot the broader market trends before they hit.
Three massive structural shifts like this require us to move directly into the hard data driving them.
164.4% is Lotte Insurance's new K-ICS solvency ratio, a huge jump from 119.9% that easily clears the 130% minimum.
1.6 trillion won, or roughly 1.1 billion USD, was, systematically slashed from their alternative investments over 20 quarters to make that jump happen.
700 billion won, which is about 500 million USD, came directly from selling off or recovering 31 high-risk assets, including a massive 100 billion won, or 71 million USD, residential bridge loan in Seoul.
10 Korean banks just launched UniKA today, entering like an instant T+0 stablecoin cross-borders settlement experiment called Project Pangea.
37 European banks in the Savalas network are already doing this, so, connecting with them is a huge technical leap.
14 Shinhan card products, along with IBK's Bill S.7 card, were axed today, suddenly ending, premium airport lounge access and no-spend discounts.
100% agree that this hurts consumers.
100% of this credit card pullback feels exactly like streaming services ending password sharing, which is incredibly painful for you, the consumer, but a harsh, necessary reality check for these companies to normalize their profit margins.
6.7 billion won, or approximately 4.8 million USD, in government blockchain grants just went to a Bank of Korea consortium instead of private startups.
12 downloads or fewer is what some of those past government-backed apps logged.
All logic exists in continuing to fund them over hungry, independent innovators.
Translating that data dump into, forward-looking subsector signals, the 164.4% K-ICS leap we discussed removes Lotte Insurance's primary regulatory barrier, making them, a materially cleaner M&A target heading into H2 2026.
For fintech, the clearest signal is that UniKA positions Korean banks at the front of stablecoin settlement rails, ahead of H2 2026 won-denominated stablecoin legislation, allowing them to capture a crucial network advantage.
And for consumer finance, the undeniable signal is that the card sector pullback indicates strict margin normalization, making the pivot to digital payment volume growth the key differentiator for the next earnings cycle.
Just a quick reminder before we wrap up, this deep dive is strictly an analysis of structural trends shaping #CoSPI and contains no buy or sell advice.
It definitely leaves you pondering that KISA blockchain grant we just mentioned, though.
Absolutely. How will Korea's digital finance ecosystem actually evolve if public funds consistently prioritize well-capitalized incumbents over independent startup innovation?
That's today's AI PRISM, stock investors. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI PRISM is a WAN-IFRA award-winning series. We'll be back tomorrow.